There was not a single concrete tower launched in Q1.
For the last couple of months, it's felt like we're maybe reaching the bottom of this cycle.
Sales last month were about 1.2% higher than the year before.
There's still limited inventory in certain pockets.
Coquitlam townhomes, Langley townhomes, Mission townhomes, North Van townhomes.
Fixed rates, they were starting to move. So that created a sense of urgency for people.
We have all these condos under construction today. They'll complete over the next couple of years. And then a huge gap in new supply that comes in behind it.
You got to be a little bit more open-minded and a little bit more creative in this market.
Welcome to the Rennie Podcast. I'm Ryan Berlin, Chief Economist and Vice President of Intelligence here at Rennie. And as always, I'm joined by Ryan Wyse, our Market Intelligence Manager and Lead Analyst. God, our titles are long. We need acronyms.
You want to do acronyms?
You would be MIMLA.
MIMLA?
That works.
Okay.
Ryan Wyse, MIMLA. And I would be CVIP. I don't know. That's worse.
Yeah, I don't know that is going to catch on anytime soon.
We're joined by Danny Chow today, whose
Welcome.
title is a lot simpler. He's a Rennie advisor, one of the longest serving and highest performing advisors here at Rennie. You've been in the business for 30 plus years?
31 years this year.
31 years.
Didn't you just
Were you
have
like
a big
10?
milestone recently that a lot of people were celebrating?
I had a 20-year, what they call a medallion lifetime member.
Wow.
So it's a 20 years being in the medallion club for the MLS.
What does that mean, though?
Basically means that you've been one of the top producing agents in Greater Vancouver for the last 20 years at least. Yeah, it's been a long time and it's very exciting to be acknowledged on stage. There's only 10 other people this year that was actually part of that club. And I think overall they said there's only 250, 300 people that's been in this like lifetime member club or something like that.
That's
They're meant to
amazing.
be.
Yeah,
So,
that's impressive.
yeah, it's been a long time. So all 31 years with Rennie since the beginning. So long time.
Amazing.
Long time. So
Yeah.
thanks for having me.
Yeah. And so, I mean, to be acknowledged, just going back to that, being acknowledged in that way is really impressive too, because it's over. That means you were successful in every kind of market.
Mhm.
Yeah, well, starting in 95, like in the 90s and going through the kind of year 2000 in the kind of the financial crisis. I saw the Olympics. I've seen all the ups and downs of all the different markets. And it seems like every time you have these different types of market, it goes in the cycles. And usually these cycles, I find that it's kind of like a 6 to 9 month cycle that goes through. But for some reason, this cycle has been a little bit more difficult to kind of
For lots of reasons.
So
Lots to chew on today. We're going to dive into the latest resale and pre-sale / new home numbers.
We're not using pre-sale.
All right, new home numbers. We'll talk about why we should be selling on the perception that it's a buyer's market everywhere out there. You see what I did there?
Yeah.
Yeah. So I think this is the selling. That's what my kids say. They say you're selling, and that means that you should be. No, wait, no. What does it mean?
I don't know.
If
My
you're selling,
kids are
if you're
younger.
selling,
I
it's
have to
like
put up with all that slang.
it's not a good thing. It's like a negative thing.
Well, we tell, we don't sell.
We do. But we're going to be selling on the perception that it's a buyer's market
Okay.
everywhere. We'll talk about how we should interpret the latest inflation figures that were released this week or last week, depending on when you're listening or watching. Okay, let's start with the resale market. 3,100 MLS sales in April, still a third lower than the historical average for the month. But for the first time since January of last year, we had year-over-year increase in sales. Does that matter, really? And what does it tell us about where we're at in the market right now?
Yeah, it matters a little bit. So sales last month were about 1.2% higher than the year before. So about the same level. But I think how we got here is quite different than last year. And I think that's important context for how the year's progressing. Mm-hmm. Sales were so low this January. We started from a really low level, and the month-to-month increases from Jan to Feb to March to April were much greater than last year. Last year, we started off on a much higher note, and then a whole bunch of stuff happened with tariff threats and Liberation Day and all of that. The seasonality that we would typically see wasn't really at play last year. And so this year we started from a lower place, but I think seasonality has kind of come back. And so the month-to-month changes have been much greater this year. And that's how we went from sales being much lower than 2025 at the start of the year to now a little bit higher for the first time in a really long time. So I think the trajectory of the market has been quite different this year than last.
And then What about on the inventory front?
Similar trend in the opposite direction. So we started the year with more inventory, a lot more inventory than last year, and much higher than sort of that past decade average.
Yeah.
And again, seasonality is in play where inventory starts the year at kind of a bottom and then it picks up month after month after month and it plateaus kind of in the summer. So it kind of peaks usually around May or June. This year, the pace of increase is much less than last year. And that's because of so many fewer new listings. So sales, as we just said, have been increasing, but they're not particularly high. But so many fewer new listings coming to market means inventory is no longer expanding nearly as much as it did last year. And I think overall, we're seeing conditions tighten a little bit and be a little bit healthier than last year, where conditions, I think, were a little bit more extreme with really low sales and really, really elevated inventory.
For the last couple of months, it's felt like we're maybe reaching the bottom of this cycle, because for the first time in a long time, we have had a decrease in inventory on a year-over-year basis. And now with the April sales data, we see a year-over-year increase. None of it's anything to write home about, but it is the cessation maybe of a longer term trend that we had seen of softening sales and rising inventory. There's a bit of a tightening generally. Like, this is not a tight market at this point, but we have, as you said, fewer would-be sellers listing their homes. Like, we see this in the aggregate data, but obviously what Ryan and I see and what we're looking at, it's numbers, it's not people, right? We're not working with clients who are buying and selling. So what are you seeing on the ground?
There are buyers looking. I guess there's a lot more inventory to choose from. So a sense of urgency, they're just checking everything out. Certain areas, if people are looking for, if it's a school district, kind of for growing families, host a family, everything, there's still limited inventory in certain pockets. So if a client's looking in those particular areas, then there's obviously not as many options to choose from. So I think those are some of the factors that I think are people are looking at. But if you're looking for areas that have a little bit more inventory, the sense of urgency, they just take their time. I think what had happened was the affordability of properties. It just depends on that potential buyer. When I was working with the one particular buyer, for example, they wanted a place in Vancouver West Side area. They got a growing family. The parents both live within the area. And we went to look. There wasn't too many options to choose from. So other places, if you want to take a client out there, you got 20, 30, maybe even 40 homes to take a look at. But when we went to look, there was only maybe 8 places to look at. And it helped narrow things down, because I think, like what we talked about, inventory in that area was quite limited, right? So I think that was one of the biggest factors out there with clients. And honestly, I think ever since coming out of spring break, it's been quite steady, so to say. I think the other factor is the interest rates. People with pre-approved mortgages, typically they're about 90 to 120 day hold, and they've actually recently started to go up. So anybody that has those lower rates has to find something within that period. So that's the sense of urgency, I think, that wasn't happening because the rates were staying relatively. I'm gonna talk about fixed rates. I'm not talking about like the bank rates and everything, but the fixed rates, they were starting to move. So that created a sense of urgency for people.
Yeah, it's an interesting perspective, because what you're hinting at is that there's paralysis by analysis in a sense when you have so many options, right? You start to really hone in on little details that maybe aren't that material.
Yeah.
But they seem like a big deal because there are so many options in front of you as a prospective home buyer.
And there's not a lot of competition, especially last year where there's all these new listings, not a lot of buyers. Prices have been falling. Rates were falling last year. So I think, all those things add up to your point, like a lack of urgency.
There was no urgency.
We'll talk about the Bank of Canada and their rates later, but I think that's a good point. Bond yields since the start of the war have come up quite a bit
in the Middle East. Yeah.
That war.
That war.
Not since the start of the other war in 2022. That's still going
on. Yes.
And the banks were actually slow for once to pass on cost of that. So fixed mortgage rates have now started to come up, and they probably will continue to rise for the foreseeable future.
Well, I think there was a feeling too that, now we're kind of getting ahead of ourselves here. I think there was a feeling that the conflict in Iran was going to be short-lived, and the impact on oil markets and the potential then to impact further inflation was going to be limited. Right. And so now it's like, how many days in are we? We're 80 days in, something like that.
Yeah.
And this problem, this challenge now for global markets is not going away anytime soon. Doesn't seem. As we go back to local markets, you know, we talk about in some places there's potentially more urgency because there's less availability because of a neighborhood, the types of homes that people are looking for. And then in other parts of our market, we are seeing a lot of availability. So broadly speaking, the market we characterize as balanced based on the number of months of inventory that are available. So, you know, region wide, it's at 7.5. Anything between 5 and 8 is balanced. But that doesn't describe every part of the region. So where are we seeing, if we're looking for buyer's markets, because everyone just thinks everywhere is a buyer's market, I think. That's the perception. Like if you're a buyer, you're in the driver's seat. So those markets do exist. Where do we see those?
Yeah, I think there's a couple themes that we're gonna see between buyers and sellers markets. So some of the areas we're seeing buyers markets. So first of all, the overall detached home segment is technically a buyer's market right now. And specifically on the west side of Vancouver, in East Van, North and South Burnaby, West Van, White Rock, Surrey, North Delta. So a lot of those markets, what do they have in common? Affordability is challenging. Detached homes are still very expensive. A lot of people can't easily get into them. There's also, I think, in the city of Vancouver, a lot of those homes are older, either need some work or are being priced as like a multiplex land site. So there's additional, I think, inventory that's not like a true detached home. It's more of like a tear down product, but it kind of gets categorized as a detached home.
Yeah, it's development pricing as opposed to end user pricing.
Yeah, so I think, you know, more broadly speaking, it's the less affordable stuff in higher priced areas on the detached side. And then on the condo side, South Burnaby, Surrey, downtown Vancouver, all used to be very popular with investor buyers. And we know that investor buyers aren't really very active at all right now. And so there's a lot of inventory. Either the sellers are investors or end users competing with a lot of investor product. And again, those markets have also seen a lot of purpose-built rental come in to compete with for renters. And so I think those specific markets, there's additional challenges. There's a lot of inventory that I think was built that was geared towards investors, and the investors aren't buying right now.
And we were talking about it before we were recording that like a lot of this investor geared product too that's been built in certain parts of this region, it's commoditized product, right? And so there's not necessarily a lot of differentiation, I think, that's perceived by buyers from one building to the next. There is a relative abundance now of these very similar types of homes and not a deep, obviously not a deep market for them. But on the flip side, there are pockets of this market where the sellers are more in the driver's seat.
Yeah. And again, you'll probably sense or perceive a theme when I read off some of the sellers markets that we have. Coquitlam, townhomes. Langley, townhomes. Mission, townhomes. North Van, townhomes.
I sense a theme.
Pemberton, townhomes. Port Moody, townhomes. Squamish, townhomes. West Van, townhomes. And then also Squamish and Pitt Meadow condos. So not entirely townhomes, but I think it's end user, family product, less expensive neighborhoods. And I would also describe a handful of these markets as lifestyle areas. You know, you think about like Squamish, Pemberton, North Van, Coquitlam too, you know, you're close to trails like mountains, all that kind of stuff. So I think the product that's geared towards families, that's relatively affordable in locations that families like to live in, sellers markets still today.
What about the, just honing in on that, you know, broadly defined product type, not townhomes specifically, but the duplex market in Vancouver. Are you seeing any interesting dynamics there? Do you have any anecdotes related to that segment?
I feel that a lot of people are kind of looking into those duplexes, the new multiplexes and everything because of no strata fees. Because sometimes in these buildings, townhouse, you could have strata fees of $400 a month, but if you get in a duplex, these multiplex, you're saving $300 to $400 a month. So they're moving towards that, and I feel that also with duplexes now, even with multiplexes, families can buy and live close together, and that's what I've been finding too. Another type of product that I've been finding out there with these duplexes is builders are doing duplexes with legal mortgage helpers now, which didn't exist as much from before. If you had a duplex, right?
So how does that work? Like, what does that look like?
I just recently sold one where they had a three bedroom up, and they had a 1-bedroom legal mortgage helper downstairs.
Oh, wow.
And that was on the close to the Canby corridor. So downstairs, if you can get $1,600 a month, somewhere around there, it helps towards your payments, right? As opposed to buying, because I was working with a buyer actually, and we were looking at anywhere from a townhouse to a duplex, and we were looking at townhouses in that area, and townhouses were probably around 1.7 to 1.8 for what they were looking for. But number one, it didn't have a mortgage helper. And number two, it had like a $500 a month strata fee. So we kind of turned around and went to look at duplexes where number one, you're paying maybe $200,000, $300,000 more, but you don't have the strata fees, right? So if you don't have the strata fees, you're saving on that. And then you got a mortgage helper, right? So we made that switch, basically looking from a townhouse, and we went to duplexes.
The rent's also considerably less. Like a one bed apartment in that area goes for a lot more than $1,500 a month as well.
Oh yeah.
So I think the attractiveness for a renter, in this market is there too. You can get, it's a basement suite, so like it should be priced less. You have smaller windows, no views, like all that kind of stuff, less amenities, but you save a lot on rent. So there's certainly an opportunity for someone who's a little more price sensitive to get onto the Cambie corridor as a renter.
I think going back to what you guys were talking about, just the selection out there, it just more things like when the market was a lot crazier, there's a lot of investors that were buying. Investors, it's dollars and cents. They run the numbers and everything. And then if it works, it works, right? But now what's happening is, like you had mentioned before, most of the buyers out there aren't as many investors out there. Now we're dealing with a lot more end users or people looking to live in. So when people are looking to live in, they're checking drawers, they're checking for how many bathrooms it has.
There's emotions.
Exactly, right? So I think that's a big change too for a lot of people. It takes more time when people are buying for themselves to live in. And I'd be the same way. If I'm buying a house to live in, I'm not going to be buying the first one I look at, right? Just because the number's there. Now I've got 4 or 5 places. I'm going to check if it has the garage I want, the 2-car garage, a mortgage helper, a man cave, you know what I mean? All these different things that I would look for. So I think that's kind of where it's changed. And I think going back, like it's slowly trending, not quite, but I feel it's like it's hopefully getting to that balanced market like you guys were talking about, right? Where a house that was listed, let's say 7-8 years ago, was selling in 1 to 2 days, right? It's not normal, right? We're not stock market, right? So everybody treated it like a stock market, which they shouldn't. Like real estate has always been a long-term, a hard asset, and people just have to realize that. And I think sellers have to make that connection also too. It's not always like that. It's going to be a balanced market, hopefully getting back to it. And the other thing is, I think that what I've been seeing actually out there that's different than what I saw in the last, say, 10 to 12 years is a lot of these deals that I'm working on with sellers these days, I'm getting a lot of subject to sales happening again. And subject to sales in the last 10 to 12 years, people are asking, what is a subject to sale?
Absolutely.
Right? But back in the day, like 20, 25 years ago, it was a normal subject to have, would be a subject to sale. Like you wouldn't be buying a place without selling your place, right? And I think that's kind of changed too. So back in 10, 12 years ago when this was happening, we saw the number of sales happening because if somebody bought a place before they sell, you knew it was going to be 2 reported sales, right? Now what's happening, they're not going to buy until they basically sell their place. So that limits the number of sales being reported too, because it takes time, right?
Yeah, absolutely.
And I think that's something that a lot of sellers have to get used to, and that they're not used to when you approach them with the subject to sale offer. That at first they're like,
well, it's uncomfortable.
Right?
I mean, as a seller.
Yeah, as seller. But I think if you, at the end of the day, if you sit down, explain to them how the process works and everything, and just guide them through it, it's something that is more relevant out there with any offers. In the last probably 2 months, I've probably done 3 or 4 subject to sales. And hopefully today I should have one of the subject to sale conditions removed on one of my listings.
Now, on those offers where you do have a subject to sale, are you the only offer? Or are you competing with others who have subject to sale as one of their conditions or don't? Because I would imagine as a seller, I mean, I've been in that position before where you have a couple of offers that come in and the subject to sale, if you don't have to deal with that, you don't.
Yeah.
So do you find, in these situations too, are you finding that you're the lone prospect?
It usually depends on how long the place has been on the market for. Obviously, if you're a fresh new listing and you got activity on it, it's probably not something that you would probably try to accept. But if the property's been sitting there for a month and a half, 2 months, then yeah, I think it's something worth exploring. Because the other thing is, when you do these subject to sales, you actually have a clause that you put in there that actually allows the seller to give notice to the first group to remove the conditions if they get another acceptable offer. So there is different ways that you can put clauses in there that kind of gives you that backup along with still being available to the general public. I actually had, in the last 3-4 months, I've probably had 2 where we'd actually accepted a subject to sale, but another better offer came in and we actually had to give 48 hours notice to the first offer to remove subjects. If they didn't remove subjects, we would go with the second deal. You got to be a little bit more open-minded and a little bit more creative in this market. Everybody's situation is different from a buyer or seller, and you just have to assess the situation because everyone's different.
Yeah, everyone's different and conditions continue to change and evolve. We talked about there being, relatively speaking, a lot of interest in duplexes and townhomes. Where we're not seeing a lot of interest is in the pre-sale segment of our market, the new home segment. So let's pivot to that. In Q1 of this year across Metro Vancouver, we had fewer than 1,000 new home sales. And I know, Ryan, you'll dive into that and break that less than 1,000 number down in a moment. But that was the lowest Q1 that we've seen since tracking of this data began 15 some odd years ago. Yeah. And it was a third down versus the Q1 number from last year, which went on to be the lowest new home sales count on record.
Yes.
Give us some context to what is the number? It's less than 1,000. 974.
And that's condos and townhomes together, new of all construction statuses. So true pre-sale, under construction, completed product. Fewer than 1,000. So again, last year was the second lowest Q1. We're a third lower. So we're on track to break our all-time low record that we set last year.
Just to put some numbers to that, we were around 5,800 last year.
Yeah.
And we are tracking to about 4,000 this year.
Yeah, if that holds, it would be fewer than 4,000. Although, I mean, there's some seasonality. Q2 should be higher on a seasonally adjusted basis, but yeah, we'll see. So if we look specifically at condos, because we've been talking a lot about how there's so much completed and unsold condo inventory, and we break down the sales by construction status. So more than half of all condo sales were under construction projects. So 52% were condos in some stage of already under construction. 42% were completed. So move in today, you buy it, you get the keys, you're the first people to live in it, but it's already done, ready to go. 6% was true pre-sale.
Yeah,
so we're not calling.
It's fewer than 60 sales.
Oh, wow.
Yeah, and because there's so much completed inventory, so much under construction inventory, we're not seeing a lot of launches. So naturally, that means there's few pre-sales as well, even amongst, what little activity there already is. So we saw 21 buildings complete last quarter. So completed inventory actually went up, even though that's where more than 40% of the sales were. So we went from about 3,500, just shy of 3,500 completed unsold condos to just shy of 4,000. And that is the most in more than 15 years now.
So again, that is 4,000. So condos. So we're talking, these aren't townhomes. These are units in wood frame and concrete buildings. There's approximately 4,000 of them move-in ready. So they've never been lived in and they're just empty. They're ready for a buyer. That's a huge number, right?
Yeah, and then there's still more than half of all inventories, unsold condos under construction. So there's still quite a few condos coming, but then there were practically no launches in Q1. So there's going to be another wave of completions. So there was 342 homes brought to market and new launches in Q1. That's the lowest quarterly total ever. The 3 lowest quarterly totals ever was Q1 of this year and Q3 and 4 of last year.
Right. Yeah.
There's basically going to be this thing where we have all these condos under construction today. They'll complete over the next couple of years, and then a huge gap in new supply that comes in behind it. There was not a single concrete tower launched in Q1, which has never happened in any quarter since tracking began in this market. There hasn't been one through the first half of Q2, and there won't be one in Q2. If one was coming, we would have heard already. So there's never been a quarter in this market where a concrete tower hasn't launched before. Even in Q2 2020, when the world shut down for COVID and people went home and baked sourdough and washed their groceries, there was still one developer in this market I can sell a tower in this. So they sold virtually, of course, but even in that chaotic scene, we still had one concrete tower launched, but not this past quarter. So the investor buyers aren't there, the pre-sale buyers aren't there, and there's all this inventory to chew through. So developers just aren't bringing much product to market. The occasional infill condo, suburban townhome, that sort of thing is still coming a little bit. Well, what that means is, 3 to 5 years from now, there's going to be a huge gap in supply, and it's going to line up with, as we've talked about a lot on this podcast, when population growth picks back up in 2028 and demand really starts to come back. It's not easy to turn the supply tap back on, because it takes so long to actually bring homes to market, from launch to sales to construction to ultimate completion.
Yeah, we should say too that with the just to clarify for people who are listening, that there is added risk in trying to bring these larger projects to market, right? Because here in BC, for projects that have 100 or more units, you have 18 months to actively market and sell enough of those homes that you can secure financing from a lending partner. Call it, if it's a conventional bank, we're talking about needing to sell 60 to 70% of your building by revenue over 18 months. And the absorption isn't there. So it's simply too risky to, push all your chips in as a developer and get to the point where, you've launched this tower, you've built a presentation center, you've created all of this marketing material, you are generating leads and reaching out to people and creating this excitement and investing time and money, only to launch into a market where realistically at the current absorption rate, it might take you 3-4 years to sell a 200 unit tower, right? So whereas with the smaller wood frame buildings, there's still risk there, and absorption still isn't, what we would see in a typical market, but you can typically get those, you can sell to a lower revenue threshold, and you have to sell less volume to actually get those projects built, right?
No, for
so
sure.
That's where we see the market pivoting. So you work with clients in resale and in the new home space. Are you seeing buyers gravitate more towards completed product than in the past?
Definitely. I think the biggest difference is, like you had mentioned, just the risk involved. I think back in the day, call it 15, 20 years ago, when people were buying pre-sales were always meant to be below, the pricing meant to be below where the finished product was, and it allowed you time to grow while it's being built, to bring it up to the market level, or being above the market level for investors or passive investors to invest and make some money. But what's happened, I found, over the last probably 5-6 years, developers are pre-charging people a premium on top of what the current market is, right? So when the current market is at, let's call it whatever, $1,500 a foot, and developers pre-charging somebody $1,800 a foot, then what's going to happen is you're taking the risk of hoping that product goes up $300 a foot in the next 3 years, right? But if you go buy finished product today, you don't have that risk, right? You're buying it today's market, so you're not taking that risk of hoping it jumps up. You're buying a finished product. You can live in it right away. You can rent it out right away, and you know what today's interest rates are, so you're not taking the risk. But before, just like with anybody, where if you're buying something, it has to be some type of potential upside to it. You know what I mean? So that's kind of what buyers were looking for before. But today, I think they're kind of pivoting to kind of like finished product, resale, just for the reasons I just mentioned to you. Like, it just, people don't want to take that risk of prepaying, right?
Well, and I think more so, unfortunately, more so than we'd seen for years and years and years, we are, over the last couple of years, seeing projects where the future of that project, its viability, is uncertain, right? So you might buy in as a pre-sale buyer, early in that marketing period when a project launches, with the hopes that everything is on track, that there are enough other buyers, financing can be accessed so that the building can be constructed, and you can ultimately take delivery of that unit in, say, 3 to 4 years. And now there's more uncertainty today in that regard, that a building that you've bought into will actually be finished than there has been in probably a couple of decades.
Oh,
right?
No, for sure. And I think developers kind of, and obviously it's a business. Nobody invest hundreds of $millions just for fun, right? Obviously it is a business for them, and I understand where they're coming from. I think from a buyer standpoint, I think developers might have to kind of change it up a bit, where I've seen actually some developers, I can't remember who it is, actually been offering these programs where they're guaranteeing you the price.
Yes.
When it's finished for 2 to 3 years down the road, they're guaranteeing you the price. So I think, I don't know exactly the promotion, but some of them's like, if the market goes down, your price goes down, kind of thing. So they kind of take that uncertainty out. I can't remember which developer it is. So they've got to be a little bit more creative to entice the pre-sale market.
We've also seen buyers, like there's been a few projects that we've done where they start construction, they do a huge communications blast, and then a few more buyers come in because they want to see that construction started, because that's a signal that, oh yeah, this project's
That's a big
definitely
deal.
going ahead. It'll complete. I like the project, or I like the location, whatever they're excited about.
Yeah.
There are buyers out there who will just wait to see construction start so they get that additional certainty, even though they're not necessarily waiting till project completion.
And you're right, because mostly the ones that I think they're really important these days for buyers is the developer reputation. Can they withstand something that happens? They don't want to get into a project where suddenly they lose their money or it's delayed for 10 years. They don't want that uncertainty. But if it's a bigger developer, then there's a little bit more kind of trust behind it. I think that's really important too. But yeah, going back to, unless for pre-sales, like, unless somebody's planning for down the road, if their kids go into UBC later on next 3 years, and they want to get them a place on the west side, then you might buy into the pre-sale. You know what I mean? But if not, then you're just looking at finished product out there. Right?
And as we've said, I think we need to see, before we can reasonably expect the true pre-sale market to turn a corner, we need to see conditions in resale change. And we'll need to see a period of time where home values are starting to increase again, right? And that gives people the confidence then to move into that pre-sale space.
Yeah, I would add that we need to see inventory drawdown too, both completed and then under construction inventory too. There's so much available today that's another factor in why we're not seeing a lot of new product come there. It's competing with stuff that's already on the market.
I mean, you can find something to move into today. And because it's an end user market, that's what people are looking for.
Yeah.
Right? So investors, maybe the calculus is a bit different. So let's talk about inflation. We don't want to talk about inflation, but we're going to talk about inflation. West Texas Intermediate oil has been over $100 a barrel for the last 2-3 months. We all know from just driving around that gas is way up. I mean, it's been north of $2 for a month and a half. I mean, you just saw, what did you see? 228
yesterday.
Yesterday. So there is this perception. I mean, I think there's a bit of anxiety around inflation ticking up. Obviously, the headline rate is influenced by retail gas prices. So, the fact that gas is higher is going to impact the headline rate. I mean, the biggest concern is that the price of gasoline, of diesel, starts to permeate every category of the consumer price index. I mean, any physical good that we consume has been moved around using fuel of some sort, right? So, I mean, what we're looking for now are these rising oil prices, gas prices starting to impact the cost of everything across the board. Now, we did just get the latest reading of the CPI. So for April, a few days ago, it wasn't as bad as we thought.
Yeah, it's funny. Inflation went up. So in March, it was 2.4%. In April, it's 2.8%. And we got excited because actually it was not as bad as we
because
thought.
You're a nerd. And also,
I think rightfully people have anxiety. We went through a pretty bad period of inflation. The price level has come up and has stayed high. Things are expensive. They're much more expensive than they were, say, 5 years ago. But inflation came down. Inflation was tamed. And the Bank of Canada lowered its interest rate, and things were looking good from an inflation perspective for more than 2 years. At 2.8%, we're still within the bank's target range of 1 to 3%. But more importantly, like you just said, we wanted to know whether this high price of oil and gas had started to sort of bleed through into the price of goods. And through now 2 months, so March and April, it hasn't. So if you look at inflation excluding gasoline, so all other things excluding gasoline, it went from 2.2% in March to 2.0% in April. So it came down a little bit. Core measures that the Bank of Canada really cares about came down a little bit in April. They're at 2.0 and 2.1, so CPI trim and CPI median. So that's all great news within the context of some pretty tough news on like high gas prices, things still being relatively unaffordable. So the price of everything else other than gasoline is not increasing very quickly. There's also, as baked into that headline rate, is the base year effect from last year, where last April there was the removal of the consumer carbon tax. And so that plays into the year over year percentage change of the math. So we knew that inflation, headline inflation, was going to come up this April no matter what. So all in all, it is to say that this is pretty good. And for me, this cements the Bank of Canada's decision to not do anything on their next announcement, which is on June 10th.
Especially against the backdrop of what we're seeing in the labor market.
Yeah.
Is the latest jobs data showed an unemployment rate nationally that ticked up again to 6.9%. We've had 112,000 net job losses year to date in 2026.
And participation is coming down. So the labor force is shrinking.
Yeah, there's not a lot of like strong signals coming from the economy and certainly from the labor market that point to an economy that needs cooling. So I think that is encouraging that the underlying core measures of inflation are modest and coming down. And to your point, there's not going to be a move by the bank in June. I think their next meeting after that is in July, and then they skip August into September. So, I mean, realistically, we are likely not looking at a rate change until at least the fall. And perhaps not then, because again, the bank sees this for what it is. And as the data evolve, the perspective will evolve. But we're not dealing with inflation like they are in the US. The narrative coming out of the US is quite different, because I think the latest read there was 3.8%, if I'm not mistaken.
Yeah, they had higher inflation coming into this period. They have tariffs on everybody, or almost everybody, and so they've a hotter labor market than we do. So they've been dealing with more inflationary pressures at home in their country than we have here.
It's going to be interesting to see how that plays out down there with the new governor of the Federal Reserve coming in with I'd say effectively a mandate to cut rates. We'll see how that goes.
But like you said earlier, Danny, fixed rates have started to come up because bond yields have come up. So the Bank of Canada is not raising interest rates, but fixed mortgage rates are rising.
And so for you, Danny, like obviously, people who are participating in the real estate market will notice that. They'll notice how interest rates are changing. With the clients that you're working with, are they sort of a step ahead of that? And are they looking at, let's say, a conflict abroad and the impact on oil and how that's now resonating in the local economy and what that might mean for their real estate purchase or for them selling? Like, are they thinking about the economy in these more holistic terms, or has it really come down to like prices and interest rates?
I think it depends on the actual, if it's a seller or buyer. So as an investor, seller, so to say, yes, they're looking at interest rates and everything. It's all a numbers game, right? So if the rates are going to be high, it's tougher to make the numbers make sense, right? So as a buyer, I find that I always tell my clients there's really no good times and there's no bad times to buy real estate, because if you're looking in a particular area where you want, once again, I keep on saying, where your kids go to school or you're close to parents, it might not come up when you're looking, right? So if you're looking, I always say that as a buyer, I have a very interesting story on which I can tell you another day, but I had one client who wanted to buy a place. They saw 3 places they liked, but they didn't want to offer on it. And I was like, this place checks all the boxes. Like, what are you waiting for?
It's like a grade 5 romance. It's like, just tell her you like her.
At the dance. Yeah.
And I was like, okay, I'm just curious. Like, you don't have to buy if you don't want it. I'm just curious for my sake. Can you let me know what's holding you back? And they're like, well, if we put in an offer today, I think it shows that we're too serious and the seller is not going to come off on their price. I go, really? Is that what you think? And I said to them, like, okay, well, is there a price that if this place sold for, would you be upset? And I said, if this place sold for this dollar, how upset you would be? And he said, I'd be very upset. I go, perfect. So why don't you try and offer around that number? And if it doesn't work, then we move forward. But if that's your only fear, that it just doesn't make any sense for you to not to try and offer in this market. I go, for you to assume that somebody would be upset and all kind of stuff, you don't know what the scenario is, right? Let's try. And long story short, we tried, and it went back and forth a couple times, and we ended up getting it for less than what we had targeted for.
Right.
And they got the place they wanted. and they're quite happy.
Awesome.
So I think it goes back to kind of there's no good times or bad times. Just have to find the right time for you.
Absolutely.
So yeah. So that's an interesting one.
All right. Before we wrap up, we have a question from Farouk in Vancouver.
Hey Ryan, this is Farouk from Vancouver. It feels like everyone's a little stressed in the market right now. Buyers seem nervous to make a move, and sellers are struggling with pricing and expectations. From what you're seeing, who's having the tougher time right now?
Okay. Well, I realized that question was directed at the Ryans, but I think, Danny, you're better positioned to
I think
address
we
it.
should take a lead on that one.
Farouk, I think just to answer your question, I think in today's market, it's probably a little bit more difficult to be a seller right now. It's because out there's a lot more inventory for buyers to choose from. So when buyers have a lot of options, it takes longer to sell a property these days. So if a seller has a vacant property, they're paying higher interest rates. So typically I would think right now it'd be tougher to be a seller right now. Buyers, yeah, they have a lot of options, and if you find the right one, if you shoot your shot, you might get a good deal out there, right? As a buyer, so definitely, I think it's tougher to be a seller right now in today's market.
We're fortunate, I think, from a broad market perspective, that while it is tougher for sellers, I think there's not as much urgency to sell as there might be if the economy, even though it's not doing well. You know, when we look at like an 08, 09 situation, right, where you have a swath of people, homeowners who lose their job, then you have a group of people who need to sell. They don't have an income to support their mortgage payments. They need to sell. Now, of course, people in every market need to sell for various reasons, but I don't think we're seeing that economic impetus to listing and selling right now that we've seen in other downturns. I think there's a risk there that the economy does go south and we do see more listings because people can't afford to be in their home. I don't sense that that's the reason people are listing right now, but nonetheless, still challenging for those who do have a reason to sell and move, right? Thanks again for the question. If anyone else has questions for us, you can email us at intel@rennie.com, or you can leave a voicemail at speakpipe.com/the Rennie Podcast, and we'll try to respond in our next episode. Before we wrap up, Danny, any final comment? And if not, I mean, if you have a final comment, that's great. Yep. If you don't, are there contact details that you would like to share with people if they want to get in touch?
Yep. Just some final comments. I think just going back right now, where if you're a buyer, I think it's a great opportunity out there to buy, depending if you want a house or a condo. It's definitely a lot of opportunities, and I think this is the time to act on it if you're actively looking. So I can be reached at dchow@rennie.com. So that's dchow@rennie.com. And my number is 604-765-2469. Thank you.
Awesome. Danny, thanks for being with us again. That was a lot of fun.
Anytime. Thank you.
And thanks everybody for listening and watching, and we'll see you next month.